Top 10 valuable tips for young investors. Are you a youngster and putting first step in the business and looking to invest? So this video is for you, because we will tell you 10 valuable tips that you should know before investing. By the help of these, you will become a successful businessman. Hello everyone, and welcome back to our channel, Mr. Deep Pocket. I hope you are healthy and happy. If you are a newbie in business and going to invest, then you should watch this video till the end with full concentration, because these tips will help you before, during and even after your investment. So let's get started from tip number 1. Number 1. Learn and educate yourself with the entire process. As a youngster, it's important that you should be familiar with the market and the business you are investing in. Listen youngsters, you are putting your steps first time in business and investment, so keep in mind that knowledge is the best friend. This is why it's very important to know the process. You should be familiar with the prices involved in stocks and equity. Then you have the premium time to acquire them. This is a habit you'll want to pick up ASAP and never grow out of it, as you'll always be exploring new areas and keep up to date with the markets. Choose some stocks and watch how they move, and read financial books and see how they affect and move. Get to know and join forums where people discuss stocks, crypto or commodity prices, and start reading books. First think and get essential information about anything you are investing in, that you can easily choose and make correct decisions. Here you have taken the first step towards investment. Let's go to the second and very important tip that you should follow. Number 2. Fix your personal finance. We hear many young investors eager to invest and build wealth. We encourage this positive approach, and we are encouraging you to do that. But first, take your personal finances in order and fix them. Pay off all those high interest debts, because they'll be costing you more than what you'll make from your investments at the beginning. Here's your position to build wealth, but who knows if something bad happens. You should have an emergency fund that can cover your expenses for at least 3 months, or better 6 in case of a severe emergency. This is the last thing you want to do, use the emergency funds to cover your day-to-day expenses. Till now you have learned the basics that will help you before diving in business and investment. Let's move to the third important tip for a successful investment. Number 3. Set your investing goals. We think this is not a valid approach, that I want to get rich. We understand that. All investors want to do that. But an investing goal should be more specific, because you have to face many ups and downs, and an ideal goal or approach would be great. First, have a rough idea in mind, and this should be long term, because these get-rich-quick schemes don't fit into well-thought-out investment plans. You should think realistically, at least 3 years or more likely decades. That gives you the best chance of building wealth. Here's a common public opinion that some people say the shorter-term opportunities never come up. Here's a real test of your skills, that you get the right requirement and gain more knowledge. For example, like picking stocks that have crashed in a recession and then waiting for them to go back up in value. So wait until you've got plenty of those before you start looking at shorter-term opportunities. And an ideal young investor should set an amount that you want to invest regularly. It is fine to start with low, leading to an increasing one over time for long term, because the number or percentage of your initial earning depends on your current circumstances and helpful for long-term goals. But it's fine to start low and increasing it over time. I hope you are all enjoying this video, so give a like to encourage us. Till here you have learned briefly about the hidden and important things to start investment. Now suppose you have started investment, then moving forward to the next step, so you can get a better idea as a young investor who has all the basics required. The fourth tip is, set a strategy. We think there are 2 strategic extremes, and the investing strategy falls between them. At one extreme, you can buy for the long term and wait for their value to go up, in line with the stock market, or if you've chosen well, beating the stock market, that's a buy and hold strategy. And then there's buying and selling within a short time frame, usually days or weeks, expecting short-term swings to happen. That's called active trading, or really short-term is day trading, where you'll buy and sell in a matter of hours or even minutes. We think the short-term trading is a riskier strategy, so we recommend you long-term strategy, and most investors who make solid gains use the longer-term strategy. Buy and hold. Of course, a buy and hold strategy doesn't mean you're going to hold on to everything forever. With stocks, you'll read the annual reports and look at the quarterly earnings statements. Soon you would know fundamental analysis and you'll be able to spot the signs that it's time to sell. But basically, our recommendation and the reality of the entire market of the world is the long-term strategy of buy and hold. To keep your interest, let's suppose you have chosen the long-term strategy and now moving towards the next important tip. Number 5. Avoid leveraging. Do you know leveraging, it means investing with borrowed money in the hope you'll make a profit and pay it back. Let us explain for a long-term investment goal that it is not the ideal approach. Leveraging may look tempting, but it's risky. That's a good reason to avoid it. Only even think about using leveraging if you fully understand it, and it is within your risk tolerance. But we strictly oppose this approach of leveraging. Let's move forward to the 6th tip. Never invest in anything you don't know. Right from the beginning, you should follow the simple rule of never invest in anything you don't know. If you don't understand how it works, don't invest. Do your research and don't let somebody else do it for you. Never trust such false talking salespeople who tell you to make rich and like others. Never send your money and leave it to them. It's never going to work because you are a younger and new one, so don't throw it away. It means that you should have to do lots of reading and research. Now moving towards the next one, the 7th one is learn to save rather than spend. To be a youngster and new one in business, we recommend you to save rather than spend. This advice is the most obvious one given out by top business professionals. To be a successful investor, you must do something that nobody in the world wants you to do. Save some of your money instead of spending it. A simple rule between a successful, brighter future. Let's move to the next tip, and the most important, especially for youngsters. Get to know the taxes and inflation. Mostly, investors, especially youngsters, forget how much inflation and taxation can affect their returns. It will impact your real returns. If inflation is high, real returns will be low. The future inflation rate will also impact your future earnings. Therefore, inflation affects returns badly. Make sure you know your tax policy and that a tax-deferred account will build wealth faster than a tax liability account. This is a wrong approach of putting taxes above all else can cause investors to make misguided decisions. While tax implications are important and they are secondary to investing and securely growing your money, while you should strive to minimize tax liability, achieving high returns is the primary goal. At this stage, supposingly you have learned and educated yourself with all above tips, so time to test you mentally, because the next tip is take emotion out of the equation. As a youngster, keep in mind that investing should always be rational and not driven by emotions. We recommend you to stay calm, because when emotion comes, that's when investors do something like panic selling and price gains start to go down. If they stayed calm, they'd have just ridden it out and waited for investments to their value, not for their current circumstances. Also remember, good investing isn't usually exciting. Here we quote a famous investor who says, "If investing is entertaining, if you're having fun, you're probably not making any money. Good investing is boring." If you want excitement, go to the casino instead. Many great companies are household names, but many good investments lack brand awareness. Finally, the last one and the important one thing you should learn is focus on the future. Successful investing requires making solid and informed decisions based on things that have yet to happen. And long-term investing is essential to greater success. And while active trading, short-term trading can make money, this involves greater risk than buy and hold strategies. Our mission is to educate and inform you with all the unique and hidden aspects of investment, and hopefully you enjoyed the video. For more interesting upcoming videos, subscribe to our channel, Mr. Deep Pocket, and like to encourage and share with your friends who want to invest.